Hey there, it's John.Hunter, your mortgage hunter, coming back to you again with another rate update. This one for the week ending in May 10th. Can we call 2 weeks in a row a trend? How about three, right? Last week's jobless claims gives us hope that the next week's report on consumer sentiment actually can cement that the Fed gets the all clear to start lowering rates. So this week, we have the 30-year fixed at 6.75 to 7.375. The 15-year is about 6.25 to 6.875. FHA 6.75 to 7.5. VA 6.625 to 7.375, and down payment assistance anywhere from 7.25 to 7.875. Remember, guys, these are all based on loan amount, credit score, loan type, property type, whether you're a first-time home buyer, income level. There's just a lot of variables there. So if you have any questions, please reach out. I'd love to give you an individual quote that you can actually sink your teeth into and maybe be able to count on. So I don't know if you noticed, if you come back week after week, the biggest change there was really in down payment assistance. Just a week ago, they were starting at about 7.875, and that's about a 5/8 drop in a relatively short amount of time. So that's a great trend. We really hope that continues. We'll have to see. Right now, the last 2 weeks, softer than expected reports one on unemployment, one on jobless, have really just bolstered the Fed's. They're like the airplane circling the airport, right, waiting for that clear to close or clear to land. And I think these two reports are starting lending to that. They're not going to base any decision off of one report, or even two for that matter. But next week's consumer sentiment really can reignite the conversation about multiple cuts, not just one. Because as of last week, the Fed was really only pricing in one cut for this year, and now they're talking about two cuts. So before long, we could be back to three, and everybody could get excited, and we could see a significant drop in rates. We're really hoping for that, of course. I've talked about that here in the last few weeks, where it really depends on the week, and the Fed is pretty finicky with this, but they've shown the ability and the willingness to wait. So hopefully next week is a blockbuster report. The market seems to be putting a lot of hope on that right now, and we'll have to see. The Fed just needs to see that interest rates, or inflation, that is decelerating before they can feel comfortable in doing this. So, hey guys, John.Hunter, I'm your mortgage hunter. Come back next week for another report. I'm going to give you all the information on consumer sentiment, and got a couple other fun ones next week. And there's one I'm going to be doing here on a hidden risk to the market that nobody's talking about, and it's pretty significant. And I think the Fed and the economists are missing the boat on this, and it is the elephant in the room. So come back. I'm going to talk about that next week, and I will talk to you soon. Have a wonderful weekend. Bye-bye.